Hi, thanks for joining me again. Today's video is how to know and understand when a market may change trend and what are the telltale signs. I've done a video on this previously. It was quite a while ago now, and they sort of get buried after so many videos. And this is such an important concept to understand that I've chosen to do another video. Now this is the CME futures chart of Bitcoin daily. I like this chart. It's been very clear to read for a long time. It's easy to understand. So I've used it as an example chart many times. I urge you to look at the big picture on charts regularly and look at how charts see the buyers gain the upper hand in a wave of buying, and then the sellers gain the upper hand for a period. And then the buyers gain the upper hand and the sellers gain the upper hand. And generally, most charts, particularly charts that are trending, will see this pattern of buyers versus sellers. And you can use this information to your advantage. I'll continue marking these for a sec. Think of these periods as waves, waves of buying and waves of selling. And then when you measure these waves against each other, even without a proper wave chart, which makes it a little easier, you can compare these waves in both length and duration and compare these waves against each other and gain some understanding from it. So you can see here that this wave is quite long in length and it lasts a long period of time. And although the wave in response, lower, was fairly large, when you look at the response to that wave, that down wave, it was a long and strong up wave that created a clear new high. So although some supply may have been drawn out here, the buyers in the market were able to absorb that supply, and then the demand was strong enough that it pushed prices to a clear new high. And then in response to that clear new high, the sellers weren't particularly strong. It was a short, sharp down wave that did not last a long period of time. And remember that length and duration are almost equal to volume. So when you're talking about the length and duration of a wave, you're actually talking about how much volume there is on the wave to a large extent. You can look at the detail of that volume if you've got access to a wave chart, and that may help you a little more. But you can think about how much volume is on these waves, so how much effort has been put in by the market to make the move. Now you can see the next up wave in response was much shorter, so you've got shortening of the thrust. Look at how long this up wave was, then how long this up wave was, and then how long this up wave was. There is some shortening of the thrust in the market, and there was hardly a new high made at all. But we wait and see how the market will respond when the sellers get their turn. And the sellers really didn't cause much damage to the chart, and price then moved to a clear new high. The next down wave, however, was probably the biggest down wave on the chart, even bigger than this down wave. So supply is being drawn out. Now remember, what we're going to look at here is when the length and duration of waves change compared to each other, we need to sit up and take notice. Now the length of this selling wave is the longest on the chart, and then the buying wave in response is shorter and does not go anywhere near making a new high. Here's the highs, and here's the highs of the wave. At this point, the sellers may have taken control. The length and duration of the selling waves is now longer than the length and duration of the buying waves, the up waves. Right at this point, the trend may be about to change. Wyckoff said about 100 years ago, he said, when he was talking about an uptrend, when the waves of buying shorten and the waves of selling increase in both length and duration, a market may be poised to change trend. And this is exactly right. We can see it now in the markets. Using a wave chart helps you considerably. Here's my wave chart. This is the Bitcoin chart. I've got the Bitcoin chart up to this bar here. If we put in, that's a $1,000 wave. If we put in a $5,000 wave, it's too big. We put in a $3,000 wave. That gives you a clear look at the waves on the chart. There's no detail in the waves, but you can clearly see what's going on. And in particular, if we look at this wave here, where we talked about this being the longest down wave up till that point on the chart, all the other down waves were shorter and didn't last as long. Even this down wave, this is where I made a video asking if this was a buying climax on a weekly time frame. And there was some profit taking there for sure, no doubt about it. But the market gathered itself up and continued higher. But this down wave here, where the market was poised to change trend, the sellers really came in strongly. It's not so clear on the chart, but if you look at the volume, this is the cumulative volume for the down wave. So just accumulating each down bar and the volume down here. You can clearly see that that volume was much higher and stronger than what there was max on this up wave and what there was max on this up wave. The buyers had weakened and the sellers had gained control. And then when price came back up here, there was nowhere near enough demand to push to new highs. We would have had to get up here. The trend was poised to change here. And if we look at a slightly smaller time frame, that's a $2,500 wave. It's possibly too small. There. Here's the down wave in question. Here's the initial up wave. There was a small down wave on very low volume. But here, this up wave here, it only had 1,900,000 contracts on it. This was the lowest up volume. Here's the up volumes. This is the lowest up volume on the chart up till this point. The buyers were exhausted. Demand in the market was exhausted. And then when this bar here came in, this bar, and a new down wave had begun, you pretty much knew when the market broke below all these lows, that it was going to continue lower. You may have had some question as to whether this low would offer some support, but on this bar here, there was a very high probability the market was going to break down. Very high. So just as price broke below this line, below the lows of this range here, below this range, just as the market broke below these lows, you could have taken a short position and been pretty confident the market was going to go in your direction considerably. You'd seen a very high volume as the sellers began to take control. You saw the weak response by the buyers, and then buyers completely exhausted. The market was poised to tip over. It just needed the sellers to take up arms and start pushing the price lower, and that happened on this bar here. Price was about to break down, and if you were watching this live, you certainly could have taken a short position as price broke below the lows of all these bars in this little congestion zone and been highly confident the market was not going to take you out. And it didn't. It continued lower, and you could have gotten in somewhere around 5,200 with confidence. And the market traded down to 30,000, but let's say you would have gotten out somewhere at 30.5. That's a pretty good trade. You don't really want to be looking to get the absolute max of the range. That's where the danger lies generally. Just take a part in the middle and be happy with what you get. Now, hopefully that was pretty clear. The market is poised to change trend when the waves of buying shorten in both length and duration, and the waves of selling increase in both length and duration. And you can clearly see it on this chart. I'll just do it quickly again. There's the wave of buying, selling. And although that was a big selling wave, this next wave made clear new highs. So it was likely everything was okay. Wave of selling, wave of buying makes new highs. Although not great new highs all the same. Waves of selling, waves of buying, waves of selling, waves of buying. This gap down here is another little telltale sign that things weren't growing great here. And here's the increased selling wave, the biggest selling wave on the chart. And the response to that selling wave was a weak up wave that could not make new highs, a brief pullback, and then sellers appeared exhausted here. They weren't able to push price higher at all, and in response, price broke down and the change in trend was complete. And we'll just point out that there was considerable buying coming in on this bar by the looks, or support, and once again on this bar. Now, there's no guarantees at this point the market will successfully accumulate here, but there's certainly an attempt to do so. And while we're talking about it, traditional or classical technical analysis sees exactly the same thing. You get a bull flag here, and then a push out, a breakout of the bull flag, and then a bull flag there, and a push out, and a bull flag there, and a push out, and a bull flag there, and a breakout. But then, and here's that wave again, that one we had to take notice of. You know what this is, don't we? it's changed to a bear flag, and there's the breakdown in response. One final thing before we go. If I take a copy of this chart, and we'll select the bulk of it and flip it upside down, this concept works exactly the same in a downtrend, or the inverse of what we were talking about before, a chart in an uptrend. Here's a price that's downtrending. The sellers have control. The selling wave is long, and the buying wave in response is shorter in both length and duration. The selling wave in response to that buying wave is longer in both length and duration, and the buying wave in response is short. So you can see the shortening of the thrust exactly the same way. Price continues lower, the buying wave is still weaker, and then on that wave we've talked about all the way through, suddenly the buyers have stepped up and the buying wave becomes the longest on the chart. The selling wave in response is shorter and price breaks out. So it works exactly the same. And same with the classical analysis. Here you've got a bear flag and the subsequent breakdown, and then another bear flag and the breakdown. This continues. But this time, instead, you get a bull flag and price breaks out. Okay, I think that's just about my lot. Hopefully you can see now what to look for and understand when trend may be about to change. Look at waves on the chart. Look at how price moves in waves. If anyone wants my wave chart, it's a bit rough and ready, and I've got better ones, but they take hours of work to build. This is quite a simple one. It does work. There's a video from a long time ago, a couple of years ago. If you go back and find that video, there's a link for this chart. You can have it for free because it's not very good, but it works. That's the main thing. And you need your own data and you need Microsoft Excel. I think you need Excel 2013 or later. And you can put any data you like into this chart. And there's a video explaining how you do it. And there's lots of notes on the actual chart video and the actual chart, I think, to help you. And besides, if you mess it up and you break it, just download it again. It's free. Doesn't matter. So, okay, that's my lot for the week. I do like this Bitcoin futures chart. It's CME futures, the continuous contract, and it's very clear and easy to understand. Okay, thanks for your time. Hope that was worthwhile. Thanks for joining me again. See ya.